As of right now, Thursday, April 30, 2026, the live intraday trading price for SMX Security Matters PLC is $1.74 per share. This represents a modest gain of about 1.16% in early trading, following a previous close of 172. While a move of a few cents might seem like noise in the broader market, for a microcap entity like SMX, every tick carries heavy implications for its survival and the potential for a massive squeeze. Most investors looking at this stock see a struggling penny play that has undergone aggressive restructuring and reverse splits, but the reality is that SMX is currently sitting on a low-float powder keg that is primed by a sudden shift in the global commodities market. Specifically, the company has recently secured financing through 2027, effectively removing the immediate threat of bankruptcy that has haunted the ticker for years. This creates a fascinating tension because the general market narrative is one of caution and skepticism, yet the underlying reality has shifted from a story of if they survive to how they scale during a historic rally in gold and silver. The current activity we see in the intraday charts reflects a high degree of volatility, with the stock swinging between a low of $1.50 and highs near $1.83 within the last few sessions. Institutional activity remains thin, which is exactly why the retail crowd on platforms like the Robinhood app or using SoFi Invest are paying such close attention. When a company has a float of roughly 1 million shares following a massive restructuring, it doesn't take much capital to move the needle. If you're checking your individual brokerage account today, you're seeing a battle between shorts who believe the company's tech is too early for the market and a growing cohort of investors who see SMX as an essential infrastructure play for the circular economy. This isn't just about trading a ticker, it's about a company that claims to have solved the impossible task of marking physical assets like gold and rubber at a submolecular level to prove their origin. Expectations for SMX are often grounded in its rocky past, including its transition from the Australian Stock Exchange to the Nasdaq. Many traders using Interactive Brokers or the Fidelity mobile app look at the long-term chart and see nothing but a downward trend. However, the deeper analysis suggests we are seeing a structural bottoming process. The company's recent partnership with Liquos to build a tokenized market infrastructure for verified industrial materials is a massive pivot. It moves SMX from being a simple service provider to becoming the backbone of how industrial materials are traded on the blockchain. While most people are busy looking at the next big tech earnings, those engaged in self-investing are quietly watching how SMX integrates its molecular barcodes into the denim and recycled textile industries. It's a classic case where the public perception is lagging behind the actual business developments. The broader sector momentum for specialty business services and industrial tech is currently being squeezed by macroeconomic pressures, particularly interest rate uncertainty. Yet SMX has managed to insulate itself slightly by locking in that structural equity capacity of up to $100 million. This gives them a runway that many of their peers simply don't have. If you are looking for investment help or exploring different investing sites, you'll notice that SMX rarely gets the same coverage as something like Nvidia stock or Apple stock. That lack of coverage is actually a catalyst in itself. In a market where everything is overanalyzed, a low-float stock with a secured runway and a unique technological moat can catch the entire street off guard. The recent volume spikes suggest that some larger players might be starting to accumulate positions, betting on the mandatory adoption of supply chain verification laws in Europe and the UK. Let's talk about the business model for a moment, because this is where the gap between expectation and reality becomes most apparent. SMX isn't just a tracking company. They use a marker, a reader, and a proprietary algorithm to identify particles embedded directly into a product. Think about the implications for the gold industry. As ethical sourcing becomes a legal requirement rather than a corporate choice, being able to prove that a bar of gold came from a specific mine without relying on easily forged paper documents is worth billions. This is the reality that is starting to exceed the expectations of those who dismissed SMX as a failing penny stock. They are essentially creating a digital twin for physical goods. It's a concept that feels like science fiction, but is currently being tested in food-grade plastics and flame-retardant materials. Despite the innovation, the risks are real and shouldn't be ignored by anyone using a Fidelity trading platform or managing their own individual brokerage. The company has a history of delayed filings and has received Nasdaq listing delinquency notices in the past. This is the tension I mentioned earlier. You have a revolutionary technology being managed by a company that has historically struggled with the administrative side of being a public entity. For many, this is a deal breaker, but for those who understand the life cycle of high-growth tech, these are often the moments of maximum opportunity before a company matures and the stock price reflects its true utility. The fact that they are now expanding into the natural rubber industry for EUDR compliance shows a management team that is aggressively chasing the most immediate regulatory catalysts.
The daily swings we are seeing right now are also a byproduct of the current gold and silver rally. Since SMX has a strong focus on verifying precious metals, its stock often moves in sympathy with the broader metals market, but with a significant multiplier due to the low float. This makes it a favorite for those using the Robinhood stock trading app who are looking for high beta exposure to commodities without actually buying the metals themselves. But you have to ask yourself, is the market pricing the tech or just the volatility? Most of the current trading volume seems to be speculative, but the institutional silence might be the calm before the storm. When you look at the Schwab Intelligent Portfolios or other automated systems, SMX likely doesn't even show up because of its market cap, leaving the field open for active traders to find the alpha. I want to pause here and get your take on this. Comment below how many shares of SMX you currently hold, or if you think the recent financing is enough to finally turn this company around. It's a polarized topic, and I'm curious to see where the sentiment lies among those who actually have skin in the game. Looking toward the future, the outlook for SMX depends entirely on execution. The scenarios are quite binary. Scenario 1 is that the global move toward a circular economy makes supply chain verification mandatory. In this world, SMX becomes an essential utility, and the stock price likely retraces toward its previous trading highs, which are significantly higher than the current $1.74. Scenario 2 is that the company fails to convert its proof of concept trials into large-scale commercial contracts before their cash runs out in 2027. This is the risk that keeps the price depressed and the shorts active. However, with the current setup, the reality of their fully financed status for the next 18 months provides a safety net that wasn't there last year. This creates a unique window where the risk-to-reward ratio is finally shifting in favor of the bolts. Institutional activity in the coming months will be the key indicator. If we see entries from major funds or even mid-tier wealth management groups, it will signal that the administrative risks are being outweighed by the technological rewards. For now, the stock remains a battlefield. Traders using interactive brokers trading tools are likely watching the $2 level very closely, as a break above that could trigger a technical breakout that forces the remaining shorts to cover their positions. The fact that the company is actively pursuing partnerships in the fashion industry for recycled denim shows they aren't just a one-trick pony for the metals market. They are diversifying their revenue streams across multiple sectors, each with its own regulatory tailwinds. When you compare the narrative around SMX to something like Tesla stock, the scale is obviously different, but the pattern is similar. It's a company trying to change an entire industry's infrastructure against a backdrop of heavy skepticism. The common ground most investors share is the belief that supply chains need more transparency. The contrarian take is that SMX might be the only company with a drop-in solution that doesn't require manufacturers to completely overhaul their existing production lines. If that reality continues to manifest through new contracts and expanded trials, the current $1.74 price point will look like a massive disconnect in hindsight. The story of SMX is a classic example of the tension between what the market expects from a microcap and the reality of a company that has quietly secured its future. While the volatility can be stomach-turning for those new to online investing, it represents the raw energy of a stock that is no longer being priced for imminent failure. Whether it's through SoFi Active Investing or a more traditional Fidelity brokerage account, the way you approach SMX should be based on your belief in the necessity of their verification layer. If the world is moving toward a place where every physical object needs a digital identity, SMX is sitting on the keys to that kingdom. In summary, we have a stock currently trading live at $1.74, showing signs of life after a long period of restructuring. The expectations of the general public remain rooted in the company's past struggles, but the reality is a fully financed tech firm with a patented, unique solution to a trillion-dollar problem. We've looked at the recent price action, the institutional void, and the massive catalysts coming from the commodities and textile markets. The contrast between the two narratives is where the opportunity lies. As the market opens up today, keep an eye on the volume. High volume on green days is exactly what you want to see for a low-float breakout. SMX is no longer a company begging for a chance. They are a company with the capital and the technology to demand one. The authority in this analysis comes from looking past the ticker price and into the structural changes that have occurred over the last quarter. The setup is there. Now we just wait for the market to realize that the reality has finally caught up to and exceeded the expectations. Keep a close eye on this one, because in a low-float environment, things move fast, and by the time it's obvious to everyone else, the move is usually over. Stay sharp, and as always, pay attention to the data, not the noise. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.